Set clear business goals. Define your short-term and long-term business objectives. These goals could include revenue targets, market share, expansion plans, or any other measurable targets. Assess current financial situation. Evaluate your current financial position by analyzing your financial statements, such as income statements, balance sheets, and cash flow statements. Understand your revenue sources, expenses, assets, liabilities, and cash flow patterns. Define key performance indicators. KPIs identify the critical financial metrics that will help you measure your progress towards your goals. These could include metrics like gross profit margin, net profit margin, return on investment, ROI, or customer acquisition cost, CAC. Develop sales forecasts. Create a detailed sales forecast based on historical data, market trends, industry analysis, and your marketing and sales strategies. Project your revenues for the next 1 to 5 years, considering different scenarios and potential risks. Determine cost structure. Identify and categorize your business costs, including fixed costs, rent, salaries, and variable costs, raw materials, utilities. Analyze your cost structure to find opportunities for cost reduction or efficiency improvements. Budgeting. Prepare a comprehensive budget that outlines your expected income and expenses on a monthly, quarterly, and annual basis. Allocate funds for various departments and activities based on their priority and potential return on investment. Cash flow management. Monitor and manage your cash flow to ensure you have enough liquidity to cover your expenses and invest in growth opportunities. Implement strategies like optimizing payment terms, managing inventory levels, or negotiating better vendor contracts to improve cash flow. Risk management. Identify potential risks and develop strategies to mitigate them. This could include diversifying your revenue streams, acquiring insurance coverage, or establishing an emergency fund. Investment and financing strategies. Determine the most suitable investment strategies for surplus funds, considering factors like risk tolerance, liquidity needs, and expected returns. Evaluate different financing options for your business, such as loans, lines of credit, or equity financing, to support growth initiatives. Regular monitoring and review. Continuously monitor your financial performance against your goals and KPIs. Conduct periodic reviews of your financial plan to identify areas for improvement, adapt to market changes, and make informed decisions. Pricing strategy. Analyze your pricing model to ensure it aligns with your business objectives and market conditions. Consider factors such as production costs, competition, value proposition, and customer demand. Regularly review and adjust your pricing strategy as needed. Working capital management. Optimize your working capital by efficiently managing your accounts receivable, accounts payable, and inventory levels. Implement strategies like offering discounts for early payment or negotiating favorable payment terms with suppliers to improve cash flow and reduce financing costs. Tax planning. Work closely with a tax professional to develop a tax planning strategy that maximizes tax efficiency while complying with applicable laws and regulations. Explore tax incentives, deductions, and credits that your business may be eligible for. Debt management. If your business has existing debt, develop a plan to effectively manage and repay it. Evaluate the terms and interest rates of your loans and consider refinancing options if it can lead to cost savings. Maintain a healthy debt-to-equity ratio and be mindful of your business's overall debt burden. Scenario analysis. Perform scenario analysis to assess the impact of different market conditions, industry trends, or unexpected events on your financial plan. This will help you anticipate potential challenges and develop contingency plans to mitigate risks. Capital expenditure planning. Outline your capital expenditure needs for investments in assets such as equipment, technology, or infrastructure. Assess the expected return on investment for each expenditure and prioritize based on their contribution to business growth and profitability. Employee benefits and compensation. Develop a strategy for attracting and retaining talented employees by offering competitive compensation packages and benefits. Consider factors such as salary benchmarks, performance incentives, retirement plans, and healthcare coverage. Succession planning. If applicable, create a succession plan to ensure a smooth transition of ownership and management in the future. Identify potential successors, define roles and responsibilities, and establish a process for transferring ownership or leadership. Performance monitoring and reporting. Implement robust financial reporting systems to track key financial metrics and generate regular reports. Use these reports to monitor performance, identify trends, and make data-driven decisions. This information is valuable for both internal management and external stakeholders, such as investors or lenders. Professional advice and collaboration. Engage with financial advisors, accountants, or consultants who specialize in business financial planning. Their expertise and experience can provide valuable insights and help optimize your financial plan based on industry best practices. Market research and analysis. Conduct thorough market research to understand your target market, customer preferences, and industry trends. Analyze the competitive landscape and identify opportunities for growth and differentiation. Use this information to refine your financial projections and strategies. Marketing and advertising budget. Allocate a portion of your budget for marketing and advertising activities. Define your marketing objectives and determine the most effective channels and tactics to reach your target audience. Regularly evaluate the ROI of your marketing efforts to optimize your spending. Customer relationship management, CRM. Implement a CRM system to effectively manage and track customer interactions, sales pipelines, and customer data. A well-implemented CRM can enhance customer retention, improve sales efficiency, and provide valuable insights for strategic decision-making. Technology investments. Assess your technology needs and invest in the right tools and systems to streamline operations, improve productivity, and enhance customer experience. Consider solutions for accounting, inventory management, project management, customer support, or e-commerce platforms, depending on your business requirements. Sustainability and social responsibility. Incorporate sustainable and socially responsible practices into your financial plan. This could include initiatives such as reducing carbon footprint, promoting ethical sourcing, supporting local communities, or implementing responsible investment strategies. These efforts can enhance your brand reputation and attract socially conscious customers. Intellectual property protection. If your business relies on intellectual property, such as patents, trademarks, or copyrights, consider protecting your assets through appropriate legal mechanisms. Safeguarding your intellectual property can provide a competitive advantage and prevent unauthorized use or infringement. Emergency fund and contingency planning. Set aside funds for an emergency or contingency reserve to mitigate unforeseen events or economic downturns. Having a financial buffer can help your business navigate through challenging times without jeopardizing its financial stability. Performance evaluation and adjustments. Regularly evaluate your financial plan's performance against set targets and KPIs. Identify areas of improvement, adjust your strategies as needed, and implement corrective actions. Periodically review and update your financial plan to reflect changes in the business environment. Compliance and regulatory requirements. Stay informed about relevant laws, regulations, and compliance requirements that impact your business finances. Ensure that your financial plan adheres to these regulations and consider consulting legal and financial experts for guidance. Continual learning and development. Stay updated with industry trends, financial best practices, and new strategies by investing in your own knowledge and skills. Attend conferences, seminars, workshops, or pursue relevant certifications to enhance your financial acumen.